The U.S. stock market collapsed, losing nearly 90% in months. Banks failed and unemployment spiked. Now, with rising debt, high interest rates, and market bubbles, could history repeat itself? This video dives into 1929 to help us stay vigilant today. The illusion of prosperity, the crisis beneath the prosperity. By the late 1920s, America's economy was booming. Industrial output soared, cars and appliances filled homes, and consumer credit exploded. The Dow leapt from the 60s to nearly 400, a six-fold rise. But this boom wasn't built on a solid foundation. Margin trading soared. Financial leverage reached dangerously fragile levels. Behind this dazzling boom, life seemed like one long party. Jazz filled the air, couples danced through the night, champagne flowed endlessly in the bars. And New York glittered with neon lights. Everyone believed the good times would never end, that wealth would only keep rising. But beneath the glittering surface, the seeds of crisis were already taking root. Black October. Crash and panic. On October 24th, 1929, Black Thursday, the market shuddered violently and confidence cracked. Telephone lines jammed under the flood of sell orders. Brokers' instructions failed to go through. And a chilling fear began to spread. Just 5 days later, on Black Tuesday, October 29th, panic turned into full-blown disaster. Within the first hour of trading, the Dow plunged, stock prices collapsing like falling dominoes. Fortunes worth millions evaporated in minutes. Desperate voices echoed, "My stocks are worthless." Inside the New York Stock Exchange, chaos reigned. The trading floor was filled with shouting, paper sell orders flying like confetti, brokers pale and trembling. On the streets, newspaper headlines screamed in bold letters, "Stock market crash," as if the end of the world had arrived. Soon, rumors of bank failures triggered frantic runs. Long lines formed outside banks as people begged to withdraw their life savings. In that moment, the American dream shattered, and the glittering illusion of prosperity collapsed into despair. Bank avalanche and credit freeze. After the crash, the real catastrophe unfolded. During the boom years, many banks had recklessly loaned depositors' money to speculators. or invested directly in the stock market. When the market collapsed, loans went unpaid and assets evaporated. Panicked depositors rushed to withdraw their savings, but banks simply had no cash to give. Between 1929 and 1930, 744 banks failed. By 1933, the number exceeded 9,000. About $7 billion in savings vanished overnight. Families lost not only their money, but also their future. Credit froze, businesses stalled, and a tidal wave of unemployment swept across the nation. Economic trough and social shock. The economic collapse had dire social consequences. Unemployment hit 25%, people lined up for relief and crowded into Hoovervilles. Across the nation, desperate people stood in endless relief lines, shivering in the cold, waiting for a single bowl of soup and a few slices of bread. On the outskirts of cities, Hoovervilles, makeshift shantytowns of tin and cardboard. Spread like scars, where families huddled together under torn blankets, fighting against hunger and freezing nights. The countryside fared no better. In the Midwest, the Dust Bowl turned farmland into wastelands of choking sand. Crops withered, livestock perished, and farmers watched the soil of generations blow away in the wind. With no harvest and no hope, families abandoned their homes, forced to wander in search of survival. New Deal glimmer of hope. In 1933, Franklin D. Roosevelt took office and acted swiftly. He declared a nationwide bank holiday, closing all banks. Then passed the Emergency Banking Act to reopen only the healthy institutions. This restored public trust. Soon after, the Federal Deposit Insurance Corporation, FDIC, guaranteed that people's savings would be safe. While the Securities and Exchange Commission, SEC, began regulating Wall Street to prevent another bubble. On the ground, the New Deal launched massive public works. The Civilian Conservation Corps, CCC, hired young men to plant trees and build parks. The Works Progress Administration, WPA, employed millions to construct bridges, roads, schools, and libraries. The Tennessee Valley Authority TVA built dams and power plants, bringing electricity to rural communities for the first time. Recovery was slow, but these programs gave people jobs and hope. Confidence began to return, though the Depression only truly ended with World War II. A wake-up call from history. The crash of 1929 left us with 4 lasting lessons. First, bubbles always burst. Prosperity built on illusions is fragile. Second, bad policy can deepen wounds. Mistimed hikes or tightening can push markets over the edge. Third, weak regulation leaves finance exposed bank runs, and broken trust can spread like wildfire. Fourth, only social cohesion allows nations to rebuild from despair. Today, these echoes resound again. High leverage and financial engineering amplify risks. Public and private debts are soaring, weighing on future generations. Property and equity valuations climb to precarious heights, shadows of a bubble. Volatile interest rates test the nerves of central banks and investors alike. Globalization binds the world closer, but crises now spread faster. Can tech stocks withstand a confidence shock? Can the dollar's dominance hold steady? And how will emerging markets survive a sudden flight of capital? History's alarm bell is ringing. Are we truly better prepared than in 1929?